is both technical and fundamental. He has recently won also the best prize speaker award in Flame conference for Chor Bane More. So wonderful speaker. Look forward to listening to him.
Good afternoon, everyone. So now let me start with something. So generally we've had meetings for the last 5 years, and most of the times IIF has met when the markets were at bottoms. So I'll tell you about the first time I met BG. I met him in February 2009. It was a meeting of 25 people. Okay, and that was the least attended meeting ever. After that, now it was February 2009. Everyone was totally stood up. Because as they say, when rape is inevitable, enjoy it. The point is, what after that? So that was Feb 2009. So that is when I realized what is fundamentals. I was a core technical guy. For the last, all my learnings have been because of VG, Ashish, Ayush, Neeraj. Because we all met up in 2009, 10, 11 every year. And that is how the learning started. So let me go into my technical view, which is my... So let me start off with the title of the presentation today. It says beg, borrow, steal and invest. Now the last time I used these words were in 2014 when I came out with a report around Indian elections. And that was the time real amount of money was made after a long time, since 2007. So let us first go into the problem with investors. So out here, how many of you have 100% cash? I like to borrow. Okay. So the biggest problem for an investor is, so when the markets crash, you don't have money or you don't have the conviction. Alright. And it is very difficult to sell. Because when stocks are going up, you suddenly start looking at a company at 40 PE and it still looks cheap because it can compound for the next 10 years. Alright. In the same way, when prices drop, you believe it is end of the world. So as of today, I haven't heard investors talking about FIIs and DIIs in the last so many years. After 2008, this is the first time people have started talking about FIIs and DIIs. So there are a lot of WhatsApp groups. The discussion is FIIs are selling, DIIs are buying, SIP will stop, this will happen, that will happen. And the best part is, most of these groups are investor groups. Okay. So investors should be worried about the fundamentals of the company. As of today, I know a lot of fundamental guys who actually missed out looking on the results of the companies they own. Which never used to happen. They used to wait. FI karke BSE pe refresh. Now nobody is looking at it. Alright. So what happens is, cash being 100% is the only savior in a 30% drop. Because when markets are falling 30%, more than 25%, it has never been the case. There are some surviving stocks in a list of 2000. You drop 10-15%, you'll have some stocks which will do well. Okay, so for example, a lot of people made money in 2012 to 14 also, but not in 2011. So a lot of names, consumer companies, started moving after 2012. People could buy it over a period of next 1 year. So for example, nowadays I meet people, I'm very happy I have 50% cash. Alright. Then comes the difficult part. First, it is not easy to sell. Second is to keep cash. In both the times. When it has bottomed out and then it has rallied again. So there is a big difference. So even if you had 50% cash today and say roughly stocks have fallen 30%, your net impact on the portfolio is 7.5%. Alright. So even if you have 20% cash, you can be happy about it. मेरे पास 20% है, इसके पास तो कुछ भी नहीं. So there is just part of being safe. Now comes the next part. If you do not deploy that 50% cash in the crash, you end up in the same performance like the 100% allocated one. Alright, but you feel safe. Moment you have cash in your pockets, you feel safe in the markets. Now, if you go on cash early, okay, so all the people today are talking about what are the problems in Indian economy, what are the problems in FIIs and DIIs. I believe nothing has changed since 2014 to today in that sense. The same issues were discussed in 2014 in a positive way, now in a negative way. So if you would have gone early on cash, you will feel great today and feel safe buying many stocks down 30 to 40%. But eventually, you would be buying the stocks at the same price which were there in 2014. Okay, so basically you just made that 6% liquid returns for the 1 year. So, what I believe is, when there is a time to deploy cash, and when you have cash also, you generally do. So at times it is better to be invested most of the time. So, this is what happened with me very recently, December, January. So I thought, let's not keep much cash. So in January 2016, let's consolidate into, I had a lot of momentum picks. I said, boss, kachra thoda kam karte hain. Let us go into good stocks. Eventually they also fall 20%. Alright. And one of the most simplest and amazing trend I saw, which was very clear, is this multi-baggers as a keyword on Google Trends hit a high about 2007. And there are states also. So how many Gujaratis here? So it actually tells you where the most guys were searching about multi-baggers. So how many Bangaloreans here? Right, so you are second. So this is what it was, and I posted it also. So I thought, yeah, there is a problem, but it is very difficult to hack. And in hindsight, you feel, "Terko to sab pata tha, you did not do." But you can't be right all the time. Now recently, the next time, we'll go to this part. As of today, the Google trend for the word zero hedge has hit a high beyond 2008. That is how quick thinking is changing today. Everyone knows about zero hedge?
Yes.
मतलब आपकी फटी नहीं. So if you read that site, you'll know what is fear. Okay. Now, sentiments today. बीवी बोलती है गोल्ड लेते तो ये नहीं होता. आपका निफ्टी प्लस सेंसेक्स भी उतना नहीं हो पाया आपको. भेलपुरी तो शिवसागर में भी ज्यादा महंगी है for भेल. Then value investor has become value investor. Like we say in Gujarati, थोड़ा value ले ली तू. Okay, so the prices dropped later. बोले stock अच्छा है, थोड़ा जल्दी ले लिया. That is what Indian has become today, right? So, फिर अच्छा तेरी शादी हो चुकी है. Because it would be very difficult to get a girl for you in this time. Then people come up saying, should I exit everything and buy tax-free bonds? Alright. Now that is the shift in few months. Now apart from all the fund managers who come on TV, they always boast about a 30-year return, which is, say, you can debate it in a big way. But now a bond fund manager can come and say this 21-year return of bonds is better than equities. Now such a data point was never available to them in the last so many years. So if you read for that article, you will get to know. A bond fund manager comes and tells you, boss, equities returns is equal to bond over a long period of time. Alright. Buy when there is blood on the street. वो खून मेरा ही है दलाल street पे. Okay. Now we come to the part. What is a crash? Okay, so there are a lot of bookish numbers. 20% fall is a bear market. Indian indices fell by 30% in 2006 in a matter of 45 days. How many of you remember? Right? Distinctly remember such fear was there with you. not that emotional and not so much data was available every day. You have to read 1,000 messages today on WhatsApp. Everyone talking about the same stuff. So, now what is a crash? A crash is when markets have fallen by 55 to 60%. This is the end of a bull market. Okay, so this happened in 1992, 2000, 2008. So 2016 will also go down. So now we start hearing about the 8-year cycle. But we did not really have a bull market in 2000, right? Really? It was purely one sector. Me, the 1999-2000 was only that IT and telecom. Okay. So in that sense, this becomes a 16-year cycle. So it just depends. So 2016 will also go down 60%. Now this is what fears everyone. Because everyone gets reminded about 2008. Because that was the real shock. Alright. So let us see why it cannot do so much. So this is an earnings estimate chart from Bloomberg by analysts. It's an average of 1 year forward earnings and 2 year forward earnings. I'm not looking into whether they are right or wrong because everyone is as scared as an investor. So analyst is no god, neither is a fund manager. But the point comes here is this part. Now if you look at this chart, this part is 2008. Can you see where the earnings are up till October 2008? Earnings estimate never fell. The earnings were downgraded only in January 2009 to March 2009. When the market had already fallen by 60%. And it was the sharpest downgrade in 2 quarters. So when does this happen? When you want to save yourself. So an analyst is worried about being terribly wrong. Okay. Now look at what happened in 2014. Earnings estimate FY20 के reports आ गए थे. Right? So people were very sure post Modi कि earnings will continue for the next 3-4 years. Now the market falls. So same guy who talks about 36,000 will talk about 22,000. Alright. This happened in 2011 as well. So whenever there has been a sharp downgrade or a sharp sentiment hit, has been actually one of the best times to buy over a period of time. So it's not the next 3 months would be great, but the next 1 to 3 years are crazily good. Because when people fear, they give such downgrades. Then we go to the part which majority of us generally don't look at Nifty, right? Because we are invested into mid caps. But we start worrying about Nifty when the markets fall. As of today, where everyone is talking about Nifty. So the big difference in 2016 to previous such bear crashes is the fact what happened in 1999-2000 or 1992. A sector became a major part of the index because it had gone up by 10 to 100 times. So cements became a bigger part in a lot of companies in 1992, replacement value. 1999 to 2000, a lot of IT companies became part of Sensex. And that is where the rally came in. Then happened 2007, where there was a huge move in commodity companies, real estate companies, infrastructure companies. So that is how the weightage was. So you'll be surprised to know, Arcom was placed 7th in the list of top 50 stocks. Arcom. Above Infosys, L&T, HDFC, ITC, HDFC Bank. Alright. So that was the index in 2007. Even Unitech was there in the top 20, above HDFC Bank. Unitech above HDFC Bank. So when I take this data to people, people get surprised. Okay, so that is how a structure of a market has changed. So same happened because there was a change from market cap weightages to free float. So what would happen in this case? PSUs would be 1 lakh crores market cap with 10% free float. So in a normal market cap weighted, you would have ONGC second highest and top highest would be Reliance. That shifted totally when it became free float in 2009. Now the change is what? Out of this, 4 companies are not there. Reliance itself was 12.15%, followed by RPL, which got merged into it, another 2.4%. That was 14.5% of the index. So it was all shifted towards oil and gas, commodities, and that rallied big time, that was the reason. Now we come to today. Infosys is the highest weightage. Next is HDFC Bank. Has Infosys performed in the last 8 years in a big way? So why is it the topmost? And Reliance has gone down by 40%. So market cap of other companies fell much more than Infosys and HDFC and it became free float. So the shift today is your top companies are no more as dirty as it can be. You never know what can be there inside, but that is the big shift. And that is where people forget. Okay, people will believe markets can go to 5,500, but you ask them HDFC 700 होगा क्या? दिल से पागल है. तो निफ्टी कैसे होगा? Because if you say one arm will get bigger, doesn't happen, right? Everyone has to go together. So that is where the change is, and that is the reason I am very bullish in the fact that because it is not 2000. All right. So a few things. The top 4 weights: Infosys, HDFC Bank, HDFC, and ITC now command a weight of almost 29%. They had a weight of only 9.95% in 2007. ONGC was the second largest weightage. Now we come to the part, what is this type of a correction? Okay, so this is very similar to a correction which happens every few years when there is a lot of expectation built up. So this looks very similar to what happened in 2010 to 11. If you remember 2010 Diwali, Sensex went back to 21,000. It had gone up 3,000 points in a matter of a month. If you want to get how people can be so bullish, go to Muhurat videos of CNBC, Diwali 2010. Alright, and you'll know how bullish people were at that point of time. Delta Corp was 40% up on that day. So was SRI. In one single day. Because it was in futures at that point of time. So we had a classical move from 18,000 to 21,000 in the last 2 months of Diwali 2010. Post that, for the next 1 year, we continued to fall. We bottomed out in December 2011. Alright. World markets bottomed out in October 2011. And there also the same shift happened. Everyone remember the 2008 crisis? Was done by whom? All banking companies, housing companies. By 2009 and 10, JP Morgan, Citigroup, and a lot of bank companies were shoveled out of Dow Jones because of the free float. So in the end of 2011, I had come out with a similar report at 4,500 Nifty. So I went to fund managers and meet them. I said, US is in pain. So I asked them, what is the weightage of banks and housing in Dow Jones? So we say कि अगर अपने यहाँ 25-30% तो उधर भी 15 तो होगा. It was less than 5%. And that is where the whole shift has happened. So nowadays you get messages, Deutsche Bank is up 10%, down 10%. I think it is down 70-80% from 2007.
Or is about to go under.
Okay, so in the same way, SBI is down. But has it changed the banking scenario? Banking hasn't stopped. You get new leaders. But in the end of 2011, S&P 500 VIX, which is volatility in options, went to a high of 48. the second highest number in many years. We went to 60 to 80 for one day on 2008, the Lehman crash day. But markets did not fall as much. They were making 4 new lows around the same zone of 4800 to 4500. Now as of today, if you look at it, I was expecting 7200 to hold up. Okay, I said boss, last time ki tarah bhi wo niche tak channel mein nahi jayega, but it has gone down to test the channel all the way down. We've made 4 lows around 7500, 7500 again, then 7200 a week back. Now we are back to 6900. Very similar. 2011 pigs में एक और आई ऐड हो गया था, right? आज ब्रेक में से खाली आई बचा है. All right. So that is the shift which has happened. So as of today, this is where we are. So there are only 2 things. Either you believe this is 2008, sell everything. Na, if it is 2008, what's the point of discussion? There's no point if it is falling another 30%. You will not worry only. Sab bech do. Right? So I believe we are very close to a similar point of zone. Then we go to what happened in 2012 January. Alright. Now this is January 2012. We went from 4530 to 5600 in a span of 45 days. There was no fundamental announcement, no GST, VST or anything. There were only 2 words, green shoots, across the globe. So every report had 2 words. We can see green shoots. Alright. So that was the kind of move which happened because everyone was bearish. So what I believe is we could see something similar over the next 3 months. And this is the shorter term chart which has gone down to the lows of 6900. And what happens is everyone wants to time the bottom. So if you believe it is going another 300, 400 points down, you have to be God to get it right. कि यहाँ से जाएगा भी. And one more part about bottoms is how many days does it stay there? 5100 Nifty, August 2013. USD INR at 68. Remember the reports of 80 INR? How many days did it stay below 5500? Not even 10 days. But that 10 days is enough to rattle you, to sell, to stop believing. So this is where we are. So everyone is, this is how corrections have been. The only anomaly was in 2008, wherein the same lower structure was going on. We had some supports around 12,000 Sensex levels roughly. Things were fine. I remember VG at that point of time. He used to run a portfolio on an email group, buying from 12,000 to 8,000 every day. Consistent pyramiding. Alright, you bought everything from, I remember 199 rupees tak you bought Bajaj Finserv. You bought IDFC, Hindalco, every day from 12,000 to 8,000. And then you made a killing. Alright, so the point is even if it is 2008, you will not die after the next 2 years. So, if this is not 2008, how many days does it stay at 4,500, 4,800, 5,100? So if you believe say 6,500, how many days will it be there? And do you think you will have balls to buy on those days? So that is the difference. So what I believe is, at this point of time, why are you worried about the next 5%? If your expectation is 30%, say conservatively over the next 3 years also, then why worry about even 5%? So technically we are at a situation which is very similar, where people have no belief. Now we come to some time pass global data points. थोड़ा सा ज्ञान देने का ना? So it seems better. So institutional US equity futures positioning hits record lows. In 2007, every Tom, Dick and Harry had a futures position, even if he was a very good investor. Alright, so there is Sanjay Bakshi. He was vacationing somewhere and the markets fell and he had leverage. And a lot of other people. So I'm saying this guy only publicly accepted the fact. Others do not. So, as of today, the leverage is minimal compared to 2007. If you look at current situation, it will look good. But leverage to hai. People have loans against shares, private funding, and that cleans out because that is not fundamental, it is panic. Then we come to another data point which has actually worked over the last 5 years. Is S&P 500 dividend yield versus the 10-year treasury yield. So as of today, it is around 1.75, the treasury yield, and your S&P 500 yield is at 2.5% plus. That implies you have a yield of 12% in India. So that is the situation there. So every time it has gone below those levels, apart from 2008 where it went crazy, over the last 5 years, Zero has just been saying there will be a catastrophic collapse. Gold will become the next currency. We've heard a lot of stuff. Banks will close. Buy guns and buy food. That was what was said in 2011. Yeah, you go to those articles, you will come to know. And it's a detailed presentation. Recently we had something called Shamita also, right? So what happens is, over a period of time, in the last 5 years, this is where US markets have recovered from. So we might have fallen from 7,200 to 6,900. But Dow Jones has not broken the lows of 20th Jan. So what we see is, 2008 does not happen only because of one country. It happens to all the countries. So in 2000, whether it was Nasdaq or whether it was ZTE, everything fell the same way. So if I believe global markets are not going to go down 30%, how will we go down?
China, Brazil,
Exactly.
countries.
So in that sense, you can get out and you can get an accident also. Right? So if you look at the risks, there are unknown risks beyond what we can think. So as I said, China, Brazil, etc. There will be a lot of reasons you can find to not invest. Alright. So this is where we are standing. So my view is, beg, borrow, steal and invest. Don't worry for the next 5%. Technically, this is one of the best times because it is contrarian. It is comparatively low risk where you can't get killed. The point is, when you invest maximum, you should only be taking care of that you can't get killed. So I believe this is the time, even if you take leverage positions, you will not be killed in this fall. Now, standard disclosure, I am a SEBI registered investment advisor. Me and my family, clients, everyone owns the stocks mentioned. So these are the stocks I like.
And many more.
And many more, obviously. I am not a concentrated portfolio. So these are just some names. And then we come to the part.
How many stocks do you keep in a portfolio?
It is 20 plus. Could be more also. It is the allocation part of it. So, and it changes because I also have a momentum portfolio, so I can trade in dirty stocks also. Chor bane more so.
मतलब 5 दिन आप इनको कुछ नहीं करोगे ना?
At this point of time, as I said, I am ready to beg, borrow and steal for money to invest.
What?
I am ready to beg, borrow and steal for money to invest. I will invest.
मैंने वो SEBI का वो है ना?
So what we see is, and I can't do it also.
You can't do it.
Exactly. हाँ? मैं तो S&P 500 के ट्रेजरी यील्ड पे करूँगा, देता है? नहीं, so what I'm saying is, these are the stocks I like, but then we come to the part, moment I start talking about stocks, people start noting, which will happen big way when VG starts talking. Okay, so then I come to the presentation which I gave last year. Random portfolio, I think many people were there. So when the markets turn, it is not your selection which is important, it is your allocation. So a random portfolio in 2014, September 2014, September 2013 to September 2014 had given a return of 130%. A random portfolio of 25 stocks. So in good markets, your selection does not really matter. Unless you are highly concentrated.
But Naresh, if the channel breaks,
So I said, no, it has broken many times before also, marginally, for a few days. So if you see, we go back to the chart again. So I'll show you about this part, which happened at 5100. We broke a long-term trend line from 2009 for a matter of 10 days. And 5100 to 5200 was on the screen for only 4 hours. Forget about a day. It stayed below.
Like that no new bad data will come in 2009 is the worst case.
Huh?
Why it is implied that 2009 or 2010 is the worst case. Fresh bad data may come. So how it is we take it for granted that worst is 2009.
So what happened in 2008 and what happened in earlier bear markets is we fell 60%. The maximum any market across the world has fallen, a big market is 89%, which was Dow Jones in 1930s, the Great Depression. Now if you want to read what was Great Depression, तो बॉस अगर खाने के लिए पैसा नहीं तो पोर्टफोलियो से क्या फर्क पड़ेगा?
Most of the stock you mentioned are the part of the Nifty. And we are comparing Nifty with the stock selection.
No, I'm saying I'm not talking about stock selection. What am I saying is
Most of us are investing in not really investing.
exactly.
And I think small cap index is much above than
It is 15% higher than 2014 also.
Yes. It's higher than the bottom survey. So why do we imply?
But it is still down 30% from 2007.
What I'm saying is
So,
that present data it shows us this is the maximum that we get. So how can we borrow for the money if we don't if a fresh new bad data comes? Then how we
exactly, that is what I'm saying. What happened in 2008? Did you even get time to think about FIDI? So in a vicious bear market, before you can think, it is over. Okay. And that market also took 1 year to get over. January 2008 to March 2009.
That's why I said 2009. This market was not 2008. It was
Up to 2009. So as I said, so it was a period of 12 to 14 months. Even if you go to 1992 to 1993, it was for 12 to 14 months. Even intermediate bear markets in the last 30 years, where we've fallen 30% or more, it has been generally 12 to 14 months. Because you don't get an exit in a vicious bear market. So as of today, you can sell stocks. 2008 you could not. So between January 2007 to January end 2008, stocks were down 40%. And that too on 2 lower circuits. Because there was no exit. So what I am saying is, the point here is, if you are worried about 2008 in a big way, if you think it is 2008, then you have to realize, did you get a 2007? Right? If you don't get a 2007 type rally where there has been craziness, see, the number of stocks which have gone up is this crowd. Alright, the mid-cap guys. What is the total free float of mid-caps? You will be surprised. There is a report which I will share. The total free float of mid-caps is around $50 billion. I am saying free float, forget about what happened. So the broader market has not really gone up. So if you were to take the same index of 2007, we would be below 21,000. Because Reliance is only down. No? Okay. So this is the part where I say, so today is the time to allocate as much as possible to equity, and that's my view. I can be totally wrong. And if I'm wrong, I'll be hurt. So that is my view. So I'm allocated 100%. So if it goes down, I'll be hurt. So take your own view, take your own risk allocation. But when the markets turn, it is about allocation, not about selection. So that is where I end my session. Thanks a lot. Maybe when we come next year, we'll be in a different scenario. We'll be talking something else.
Questions? Any questions?
So you have recommended bigger cottons at a long time. What is your view on right now?
So I remain extremely bullish on all textile companies. I have been bullish for the last 2 years. But I've reduced something I prefer KPR beans.
And what is your view and opinion on Garware model?
See, it is my top holding. So standard disclosure, it's a very biased view. So if you ask, you will start believing in the company. So better do your own homework, which I think in the previous.
Textile is doing good.
See, Garware is not textile.
No,
It is-
bigger cotton and KPR.
So I like the whole textile sector, but my interest into textiles was at say 100% lower from here. So my total allocation to textiles was there in 2015. I had a 30% plus allocation to all this stock. So that's why I'm not hurt as much in this fall. Sir, let us not talk about it. It is illiquid.
Aye.